Hemendra Hazari is with us from our studios here. G. Chokalingam is joining in, as always. Good morning, both of you. Thanks very much for coming in. Choka, we ran through a plethora of stocks earlier. A lot of news as far as pharmaceutical sector goes with Pankaj. Anything you'd like to talk about? Anything of note?
Yeah, definitely. I mean, the stocks like Lupin, Sun Pharma, they all corrected anywhere from 25 to 35%. Maybe long-term investors can start slowly, looking at them and gradually build. As far as the Biocon is concerned, I'm still holding for me as well as for my clients. But still, I would say that, to a large extent, it is priced in. Upside in the short term is limited, but anybody who wants to have a very long-term view only can consider. And otherwise, opportunities are still plenty, outside these segments.
Idea sold off with that block. Any thoughts?
Yeah, definitely. I mean, the entity which has sold, I believe it's quite smart because as we have been discussing, the Reliance Jio is going to create a havoc, in the market. It's going to be very tough to capture market share without compromising on the margin. So we do not hold any mobile company. In fact, we started building up slowly Bharti Infratel, which is close to 52-week low. I firmly believe that once, a lot more players strengthen their market presence, the demand for tower would increase and the tower companies would be able to increase the rentals quite significantly. So that's the only stock in telecom related I would look at.
Hemendra, we've got a meeting. Finance Minister is going to meet public sector bank chiefs today, by the way, to take stock of the health of these banks. The numbers are all, the quarters just finished, so numbers are all well known. But any thoughts on this?
Well, the government banks are in the ICU. Given the way Governor Rajan has been telling them to disclose their asset quality, and they're going to be in the ICU for a long period of time. In fact, it's going to get much worse. The need of the hour is for the government to pump in massive doses of equity capital. There's no point talking about Janma Dhanush if the basic things are not being addressed. I think the basic issues can be very easily addressed if there is a political will and if the government relaxes its fiscal deficit. And mainly, you have to recapitalize and you have to go after these large errant corporate borrowers and use your enforcement agencies at your disposal to get the bad debt recovery. These are very simple things, and you have to give some autonomy to the PSU banks. I mean, instead of having all these committee meetings all the time, you have to implement these three things. And then we can talk of some recovery. Then you see there will be a recovery in the PSU banks, there will be a recovery in the economy, your banking industry will be in good shape. As I've said before, NPAs of the size that we have are the result of a boom and bust cycle. And in a bust cycle, you have to just recapitalize your banking industry, which unfortunately this government refuses to do.
Okay, we'll continue this. We'll take this forward. The market open is going to come up on your screen. So let's just take a quick look at what the first prices are. Let's wait for it on your screen now. 50 points on the Sensex and about 9 points on the Nifty. So ONGC starting about 1/3% higher. HDFC Bank starts up. Infosys flat. Hero MotoCorp is down 1%, 3113. HDFC Limited is up 0.65%. News flow there. Aurobindo Pharma is absolutely flat. Ambuja flat. Bosch is down about a quarter. Bosch is, done well after correcting quite a bit. Bosch from the beginning of the year is up some 20-25%. L&T is up 0.6%. Tata Motors is up 0.9%. Sun Pharma is up 0.8%. Hindalco is flat. Biocon, I guess new high, 1%, 710, 711. Sun Pharma is at about 743. Jubilant Life is up 5%. These are all stocks we put out with news flow earlier. And Torrent Pharma is the other one, which is up about 1.7% or so, 1397. It's either an approval or benign FD observations. So, there's nothing bad as part of the pharma news flow in the morning. Tata Steel is down 1%. TCS is down 0.5%. HDFC Limited is up 0.5%. Nothing there on HDFC. Rajesh Exports about a quarter higher. And as flat as they come. 1 point change on the Nifty now. It's 8221. Bharat Forge is on your screen. So truck orders are down another 30 odd percent. So very steep fall. 2% lower, 736, 737 on Bharat Forge. Lever 0.5%. Yes Bank. Yes Bank, by the way, from the beginning of the year is up 45%. I mean, by far the biggest gainer on the Nifty. Asian Paints is down 0.15. Bharti Infratel is down 0.5%. Hero MotoCorp is down 0.5%. HCL Tech. HCL Tech is down 15 odd percent from the start of the year. M&M is up 1.7%. I'm being told that M&M is now the top gainer on the Nifty stocks. So that's where we stand. Cipla 1% odd higher. Cipla Lupin 20-25% lower from the start of the year. SBI is up 1%, but nothing dramatic, nothing major at all. Okay, Adani Ports, I'm being told, is a top Nifty loser. It's down about 1.7%. It's back at 200. You know, it sells off to 170, goes up to 210. It's been that way for a while. Tech Mahindra is the second biggest loser. It's down 1.6. Coal India is down 1%. I mean, there are some news reports suggesting that Coal India, in the case of Coal India also, there might be a buyback. So that's been the case with all cash-rich PSU companies. And you got BPCL and Dr. Reddy's, which are around about 0.7, 0.8% respectively right now. Let me just take a quick look at the mid-cap index and see if we got any large changes. Jubilant Life, I think we put the news out earlier, 5% higher. Future Enterprises is up 5%. HDIL, Bhushan Steel, Hindustan Copper, these are the kind of gainers one is seeing. We could look at Just Dial, which is down 2.5%. Info Edge, which is down 2%. Financial Technologies, which is down about 1.2 or 1.3%. HT Media and NBCC are down 1% each as well. So this is the overall picture that we are seeing. So the start is as expected. I mean, nothing at all. It's very, very flat. Even in mid caps, maybe in smaller caps, micro caps, there might be larger action, and we'll put that up as well. But so far, nothing at all. Hemendra, so you were saying, you were talking about fiscal support, right?
Correct.
The more cash infusion, etc.
See, if you look back at the history of why the PSU banks are in such deep trouble, you will notice that when India's fiscal deficit was reduced, as part of the stimulus exercise, and the market was demanding that fiscal deficit be reduced, what the government did was it instructed the PSU banks to give large doses of credit to the infrastructure space. And you find the data that when the fiscal deficit starts getting reduced as a percentage of GDP, bank credit to infrastructure starts shooting up. So essentially, the government was using the banking sector to give a stimulus to the economy. Now, because of the various economic reasons, it failed. So therefore, now it is the government's responsibility, having instructed these banks to, increase credit to infrastructure. And you've seen a humongous increase in credit. Now it's the government's responsibility to recapitalize. And this is what any economy does when there is a crisis, where there's a banking crisis. You cannot expect privatization to come in and do your job for you.
One thing which is not just happening now with public sector bank NPL levels at 10-12%, but has been happening over the last couple of years, is that private bank market share is rising at a pretty rapid pace, Hemendra. And you can see that on stocks, right?
But as most analysts look upon it as a positive sign, I would look upon it that as a negative sign. Because in this type of market, there is no quality credit out there. And what they say is that we are taking over good quality credit from other banks. In this type of market, I don't see other banks giving up good quality credit either. So the question is, where are this extra loans going? How is it that these private sector banks are increasing market share? Because most of them are just jacking up the retail credit. And the retail credit, when you have a prolonged economic slowdown, is bound to get impacted. As it is, you're seeing that the unemployment data situation is quite poor in India. There are tremendous job losses. So this is also going to get impacted. So just like we had this infrastructure boom earlier, which everyone used to, applaud, today we are having the same kind of situation in retail credit. And the way it is climbing so sharply, and India historically has a very limited absorption for retail credit. You're going to see big NPAs in this sector in the future.
To be sure, growth is about 8%, Hemendra. So Let's keep that in mind.
Correct.
Right?
But if you see the discrepancies, as other analysts have pointed out, it's huge. If you exclude the discrepancy, that growth rate becomes half. But naturally, that's not what the government wants to highlight.
Okay, I'm just going to look at some other stocks. Ujjivan, if you can put it up. Ujjivan sold stock at 210 rupees about 2.5 weeks back. And I think it climbed to about 450 odd rupee, 400 bucks. It's down about 23-24 rupees today, 6% lower. It's been a steep run. Excel Crop Care is up 2%. I think the Sumitomo deal price has been announced. Quality Dairy is up 4%. Pankaj is pointing out there was some fundraising news, but that's it. We'll put out more in a bit from now. Do you expect anything from the FM meeting, public sector banks, Shloka?
Nothing. I mean, big significant thing can happen in the short term. Already they have paid the price. Already they are at the peak of the crisis. So I am not, optimistic that in the short term anything can be done unless your industrial economy recovers and banking credit growth also improves. So hands are tight. Nothing much can be done.
Can banks like Yes Bank continue this kind of?
I have my doubt. I have my strong doubt. Of course, I have no evidence of having doubt, but I believe that this kind of net NPA is not sustainable. Even we saw in the case of Jammu Kashmir Bank, which used to have a net NPA less than 0.5, suddenly spiked to 4%. Even HDFC Bank, though it is still less than 1%, has seen it, and similarly Axis Bank. So I find it very difficult to believe. But of course, let us not forget the fact that in 3.5 years, Yes Bank stock has gone up by 4 times. In 2013, it touched as low as 210. So I would believe that the smart investors would start slowly taking profit out of Yes Bank.
Okay, fair enough. Hemendra, just one clarification. The AQR, the Asset Quality Review from the RBI, that was for all banks, private, public, everything, right?
Correct.
So now this is a RBI audit, which is kind of the declared net NPAs or whatever for private banks has been after an RBI audit. So that is significant. So now if the net NPA levels have to surge, underlying loans which they've given out have to go bad. It's not as if there's anything undeclared, we can assume at least, right?
That is correct. But my issue is here, what is the credibility of the RBI's AQR? Because we've had this instance of Axis Bank, which in second quarter declared, in the third quarter it declared that because of the AQR, they've identified about 3,000 crores of NPAs. And one would have thought that was it. Then in the fourth quarter, they come out with a mysterious watch list where they say that 24,000 crores, about 60% of that is going to go bad in the next, in a very short time, which is 3 times the RBI's AQR. So my question is, what is the credibility of RBI's AQR if a new private sector bank in a 1 quarter can release data which shows, that the size is 8 times bigger? But
it's not about RBI's AQR credibility. It's about the bank itself, right? I mean, some banks said that we've provided, Bank of Baroda, for example, said that we've provided, it's all done in the third quarter. Then they come out with another large chunk of loans, which is, it's not as if the RBI signed off on these statements by the banks.
No, but the RBI has instructed them that regardless of what the bank may consider, the RBI believes that the following, accounts have to be classified as NPA and provided for it.
Yeah.
So that is the basic issue. It just tells you the widespread contamination in the banking industries and their credit portfolios.
Yeah. What about tomorrow, Hemendra? Do you expect anything from the RBI?
I think Governor Rajan will be grilled on whether his second tenure will continue. And what we have seen is that he has very ardent supporters from business media and from the foreign capital. Because if you see their articles, they're all, threatening doomsday. If his tenure is not, renewed, they say there'll be a massive outflow of capital. In fact, if everyone seems to be praising his policies in the media, and business analysts, news anchors, I think they compete with one another to praise him. But if you actually see his policies, they're very demand constricting. And I think there are valid reasons intellectually to challenge some of his policies. Because most of his policies is constraining fiscal deficit, keeping interest rates tight, are actually going to worsen the situation. But, foreign capital loves him, and he represents their interest by keeping a very tight control supposedly on inflation. And even his inflation, which people are saying he's brought down the CPI, The CPI has come down because global commodity prices have come down. It really has nothing to do with monetary policy. I mean, what is the linkage between monetary policy and commodity pricing?
By the way, so the foreign capital you said loves him. It's basically the bond guys, right? Bond investors.
Oh, bonds, equity.
But equity, I mean, actually equities, if he doesn't get a second term, it should be great for equities. Because then you got somebody in charge who will believe, who possibly would have a much less tight monetary policy, right?
This is a very strange contradiction about capital markets and the central bank. They do not like, quote, populist governors in place. Anyone who has any linkages to democracy, they like someone who's supposedly independent, but what their idea of independence is basically who represents their interests. And what are their interests essentially? In foreign investors in any country, they don't like to see high inflation because that is what affects their return. So therefore, they like to have central governors who represent those interests and keeps a very tight monetary policy so as to totally subdue inflation. But what they fail to realize is by having such a policy, it puts such a constraints on demand that it tightens your sales growth. There is no growth out there.
But you just now said that there's no linkage between CPI and interest rates, right?
No, correct. But what happens is this. You keep a tight policy and you keep interest rates high, and if you see the WPI, it is zero. So the real interest rates for industry are very high. So that puts a constraint on their demand in a situation where overall demand is anywhere under constraints. So therefore, you're going to even squeeze the economy further.
Joker, any thoughts?
No, I completely agree. In fact, I've been saying for last 1.5 years that the RBI has gone wrong. They've given too much focus on inflation. If you see last 2 years, the only economies like Venezuela, Argentina, Brazil, which have mismanaged their economy or face some instability, they had an inflation problem. Otherwise, rest of the world, there was no concern on inflation. There was worry on deflation. Now, the second observation I want to make is that I have also seen, people saying that a lot of equity money will go away in case he doesn't get the second term.
No, actually what I've heard, like for example, I spoke with Christopher Wood from CLSA. He said the rupee may see some pressure, but stock markets should rally. That was his, this is the head of strategy for CLSA.
No, that is what my firm view. Any RBI governor, if he is going to give importance to growth, then the market will surge. Now, another very interesting data point, I was trying to dig it out, you can find out. Look at the money which came into equity market after Mr. Rajan became RBI governor. I don't think he brought in he caused $100 billion inflow to come in to get worried that $100 billion will move away from the market.
Nobody's saying that. I think we are, in our assessment of all the write-ups making...
There are some reports I saw, people saying that huge money will go away in case he doesn't get. India has managed, India has managed a lot of instability in terms of political leadership, all that still... the beauty of Indian equity market is that all such things are forgotten in few days. And then it becomes, back to concern on GDP growth and corporate earning.
Most articles that I have read, I've not read many articles, but I know there are many articles. But I think the funda purely is that he's a pretty popular guy. It's not just amongst business journalists, as Hemendra said. Generally, one of the first articles I remember reading was in the Mumbai Mirror. If you remember Hemendra, once he had taken over, right? So it's not just about business media. People know connection with business media are also quite enchanted by him. So there's this. The question people are asking is, the debate is not so much intellectual, which it should be, but it's just about, the guy seems to be doing okay, doing well. Why do you want him out? That's the kind of commentary that I have read. Not a very detailed analysis of what he's done wrong, what he's done right. At least I've read a few pieces like that, but the vast majority of them are not like that. Go on, Hemendra, quickly.
See, that is the point. There should be a debate on his policies and not the debate on his personality.
Exactly.
But unfortunately, you see, much as I disagree with many of his policies, this is not the way you treat your governor of your central bank.
That's the point.
This is appalling.
That's the point.
I disagree with a lot of his policies. I think there's a very valid intellectual argument to be made in challenging his policies. But I've never seen this type of criticism coming from in the Rajya Sabha, which is the House of Elders, in such form. I mean, it is so crass. It reflects very poorly on the ruling government that you're launching such attacks on an institution which is highly respected, which is the Reserve Bank of India.
So that's the point. That's the point.
I would also like to add that a lot of commentators have said that how he has defended the rupee, and it is true that since he came in, the rupee strengthened when it was initially extremely weak. But if you do a closer study, you will find actually the external debt has gone up. So he has done this by taking on even more debt, which makes India more vulnerable really if it has a crisis in future. So these are the things which I think need to be debated, instead of these kind of crass attacks which are done on the floor of Parliament.
Absolutely, absolutely. So let's just get back to markets, which are up about 9 points or so, and about a 50-odd point surge as far as the Sensex. So 9 on the Nifty, about 50 odd points on the Sensex. Mahindra, SBI, Tata Motors. I mean, actually, M&M and SBI are the only two stocks with more than 1% gains. 25 stocks are higher, 26 stocks are lower. Adani is down 4%, is back under 200. So 196.5 on Adani. Tech Mahindra is down another 2.5%, 540 or so. I mean, actually, some of the weakest stocks are looking weak today. Coal India is down 1.3, 305 or so. BPCL, Z, Tata Steel are the other stocks which are on your screens at this point. Again, one more buyback, Choka. Coal India being talked about now.
Yeah, I probably believe that most of these cash-rich POC companies will go for buyback. If intentions to dilute the government stake, then it should be at a discount to market price substantially, so that the government reduces the stake also.
But that's the point, because in the case of Nalco, for example, the price was almost similar to the current market price. Same with others as well.
Like for instance,
in which case the government could be the sole seller.
Yeah.
Which means
there are two options. Both are ultimately positive. Like for example, while government has 80% stake, and the IPO was at 375 5.5 years ago. So it makes sense for the company to come out with a high premium so that everybody can benefit, because all those investors who bought through IPO, post-IPO, they lost heavily. So I'm keenly watching the outcome. But certainly in terms of fundamentals, these stocks look very attractive to me. All three, Coal India, NMDC and MOIL.
Hemendra, any thoughts?
You see, this whole approach of doing buybacks of cash-rich PSUs, my belief is if the government collectively told them to ramp up their capital expenditure, that the multiply effect on the economy for corporate orders would be far more significant than this buyback that is being done, which at the best can only appease some of the capital markets. Well, if you start collectively doing a massive capex,
they are collecting cash. I mean, the government is collecting cash via this. That's what they're doing, right? Transfer of cash from the company's balance sheet to their coffers.
Yeah, but what is the government doing about it? If your total expenditure to GDP, which is going to decline, which has been the track record if you look at the central budget now for some years, that means where is the stimulus to the economy? So it is better if all these cash-rich PSUs collectively were to do
Every
a
time
massive
you say
capex.
stimulus to the economy, I wish I had a bell here when I'm going to buzz that bell and say 8% growth. So what stimulus?
Exactly. But where is this 8% growth? You see, if there's an 8% growth, then everyone should be very fine. Then no one should be considering, any improvement, or the government should not be doing anything. But we have a strange situation that with 8% growth, you have the Jats, which are forward caste in rebellion. You have the Patidars, another very forward caste in the state of Gujarat, up in arms. You have a lot of unemployment and, unemployment of educated people. So if there was 8% growth, why are we having such issues? Where is this great demographic dividend that analysts keep telling us about in India, which is supposed to actually reduce the dependency ratio? But we have this very unusual and alarming situation where today you're finding out that youth are going and spending more on higher education, and there are no promising jobs out there after that. So you're seeing a lot of social upheaval. You're seeing the peasantry is up in arms, organized labor is up in arms. So, and yet we have 8% growth. So I think there is a big contradiction out here.
Yeah, something doesn't match on the ground. Half a point change on the Nifty, 82.21, 25 points on the Sensex. So there's some give back already happening. So very quickly, actually. Choka, any stocks you'd like to highlight?
Yeah, certainly. Apart from mid cap, the news one news which bothers me for the Indian two-wheeler company is that Honda Motor has captured 47% of incremental sales in the month of May, among all 6 majors. So
Almost 50% of new sales is coming from one company.
One company. So it's very interesting insight. It has got a lot of meaning for domestic players like Euro and Bajaj. As far as mid-cap size is concerned, I would like to reiterate strong buy on MOIL. Personally, I hold it. And then Sasken Communication. It has got huge cash and available at 0.5 times the enterprise value to sales is just 0.5 times compared to other companies which were taken over at 1.5 times. Then we saw the news on HDFC buying out in general insurance. There is a small low-profile company, but part of the TVS group. It's called India Motor Parts, Impal. In fact, we advised our clients to buy the stock today. It has got 10% stake in general insurance. Apart from a lot of cash and investment, Sundaram.
Which general insurance? In
Sundaram General Insurance.
Okay. Sorry. Yeah, okay.
So if you look at HDFC, they bought at 1.14 times gross insurance premium. So if you apply the same norm, the valuation is mind-boggling for Impal because apart from the insurance, it has got a cash and investments in Sundaram Finance.
Can we put up India Motor Parts Limited? India Motor Parts. I can see it here, so we'll be able to do it.
This is not suitable for people who want to make money within a year, but it's a great stock because historically it has given a huge dividend, bonus shares. 98% of the capital is through almost bonus shares. And last 2 years it was not able to grow, but going ahead it can grow. It's into auto retailing. Apart from having cash investments in Sundaram Finance and insurance, it also standalone very attractive. It has got more than 100 auto retail networks and it used to be a very solid growth stock. So long-term investors can buy this stock.
You'll be able to buy it here, or it's 674, or you'd have to?
No, I would buy. I bought even slightly at. I advised.
I was referring to there are no volumes, but
Yeah, that's what happens. Unfortunately, for all successful ideas in the beginning, the liquidity is very poor.
Yeah. Sasken, I've not heard you talk about it earlier.
No, we spoke a couple of times, and in fact, what has happened after we closed the call, the company managed to get a lot of cash by winning a legal case, almost around 275 crore. And very interestingly, the management has done a buyback. Last time and increased the stake to around 40%. Still, it is less than the majority stake. Now, with this, cash being around 61% of the market cap, there is a possibility of the promoters doing another buyback at good price. And also, this company has given excellent special dividend to the shareholders. They rewarded handsomely. So, and third opportunity is possible consolidation. We have seen Geometric being taken over. This is also into niche telecom software with about 500 crore of turnover. And all these deals happened at, as I said earlier, 1.5 times enterprise value to sales, whereas this net of cash, it trades at just 0.5 times. So this is another one stock I firmly believe can give a very good alpha in the next 12 to 18 months.
Okay. Fair enough. We'll leave it there. Gentlemen, thanks very much, both of you, Hemendra and Chokalingam. Appreciate you guys joining us as always. Thank you.